In 2 years, Cleanspark has gone from just starting as a Bitcoin mining company to now becoming one of the biggest North American Bitcoin miners. And even though they have had some tremendous growth, it has led them to have high expectations. So in this video, I'm going to share what I'm going to be looking for during Cleanspark's upcoming earnings report and conference call. I've talked about this company several times, but in this video, I really want to focus on both the caution flags and the improvements that I want to see from this company, given these turbulent times. But I don't want to waste your time, so let's go ahead and dive right in. So for those of you that don't know, Cleanspark is a Bitcoin mining company who uses their knowledge of energy management to mine Bitcoin with clean energy for a low cost. Cleanspark has 4 owned and operated facilities in Georgia, and they co-locate miners in New York, which basically means they use the facility to mine Bitcoins using their own miners. Now, the benefit of having your own facilities is that you'll be able to mine Bitcoin for a cheaper price, and because they own the facility, they get to choose what kind of energy they want to use in order to mine the Bitcoin. Also, they will have real estate, which I have said in previous videos is important when we talk about the value of a company. The co-location in New York allows them to mine more quickly, because if they run out of space at personally owned locations, they will have to buy a new facility before they can get more running. This gives them the ability to just plug in their miners and go. Cleanspark's goal and vision is to be a top 5 North American Bitcoin miner in the following categories: hash rate, efficiency, sustainability, and profitability. Hash rate is the computing power and a metric used to help determine how many Bitcoins are mined. Efficiency is when you take power costs and divide it by the hash rate. Sustainability is the category primarily focused on renewable energy, as well as renewable energy credits to offset any non-renewable sources of energy. And lastly, profitability, which includes revenue, net income, and adjusted EBITDA. Now, being in the top 5 doesn't sound like the best, but I want to use a sport analogy that I've used in my previous videos. If you were ranked in the top 5 in offense and defense, more than likely you're one of the top, if not the top team in the world. I believe the same applies with Cleanspark. Honestly, there are several companies that mine more Bitcoin than Cleanspark, and this will continue. However, these companies probably don't have the kind of efficiency and sustainability that Cleanspark does. And so how I look at this is that if Cleanspark is already one of the most efficient and sustainable Bitcoin mining companies, they can place their attention to growing miners without losing their recognition for efficiency. Some of these companies have a ton of miners, but if the government needs the company to be more sustainable, they will then need to improve sustainability for their current miners and the next miners. Cleanspark already has the framework to succeed, and they have proved this over the last year, raising their guidance tremendously, going from 4 exahash to now projecting 5.5 exahash by the end of the year. And it is from this execution that I like their growth potential moving forward. But now let's talk about the actual numbers. Much of this hash rate is not going to be included for this earnings report, which is going to look strange because this is their Q4 numbers and not Q3 like many other companies. So their 2023 numbers are probably going to look much better, assuming Bitcoin doesn't fall any further. But for this earnings report, they went from 2.8 exahash to over 4 exahash by the end of September. This is significant improvement from what we saw in the previous quarter, where they went from 2.4 exahash to 2.8 exahash. Within that time, they only mined 964 Bitcoin, whereas this quarter they are about to report they mined over 1,200 Bitcoin. That is a significant improvement. But the other thing to consider is that Bitcoin prices have been around the 20K range for the last quarter and a half. Now, why is this important? Well, the previous quarter, they were able to have higher Bitcoin prices, which is why they're expecting to have less revenue in this upcoming quarter. Analysts are expecting the company to have $25 million in revenue. When we get into 2023, then I will really pay close attention to how the company is doing, not only with revenues, but adjusted EBITDA as well. But another aspect that is going to be confusing is how their profits have been negatively impacted by the drop in Bitcoin price. With Cleanspark generating a negative net income this past quarter, I wouldn't doubt seeing this again. They admitted last quarter that the reason for the net loss was because of decreasing Bitcoin prices, and I'll talk more about this later, but in the previous quarter, Bitcoin prices fell 50%. But this quarter, Bitcoin prices barely moved. Analysts have them losing 40 cents. Last quarter, they had to report massive losses. This quarter, they won't need to report that big of a loss, but we will see what they end up reporting. However, personally, I don't care as much about net income as I do adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization. Cleanspark last year reported a positive adjusted EBITDA of $9 million. I am expecting them to continue to improve on their adjusted EBITDA, but these numbers are going to mean a whole lot more in 2023 as they continue to grow their hash rate. But if I'm honest, I'm not really worried too much about their earnings in the future. I think that this quarter's earnings won't be impressive despite the amazing growth that we have seen. Last quarter, it was all about how the Bitcoin mining companies do when Bitcoin prices are significantly affected like we've recently seen. This quarter though, we won't see this much, but I think what any Bitcoin mining investor should pay attention to is how these companies are utilizing their capital. There is no question that 2022 going into 2023 is the time of recognizing companies that are either profitable or going to be profitable. But also look at companies who use their capital well. What we have seen from this company, which I've said in previous videos, is that Cleanspark will not mind spending Bitcoin to increase hash rate so that they can acquire more Bitcoin while prices and mining difficulty are still low. Then we will start to see them slowly move into holding on to more Bitcoin. What we saw in September is that Cleanspark has started to hold more Bitcoin. Their mining operations allow them to only spend a portion of their Bitcoin, and now they can use their other Bitcoin to either acquire more facilities or hold. And I firmly believe this is going to be by what opportunities come up for them. But capital utilization is key for Cleanspark because they don't have a lot of cash on hand. So their balance sheet will be something I will keep an eye on going into 2023. For this earnings report, if they miss analyst numbers, I don't care about it in the short term, but it will give me a better idea of what to expect if we remain in this crypto winter and don't see an increase in Bitcoin prices. And unless Cleanspark says something crazy during their earnings report, I'm not going to be selling shares or asking myself why I bought this company. But here's where I want to warn people who are invested in Bitcoin mining companies. There were a lot of people who believed Bitcoin was going to reach 100K this year. And when I hear about people's price targets, they assume that Bitcoin will reach 100K. This, in my opinion, is extremely dangerous. You see, Bitcoin has tremendous fluctuation in price, and it can be hard to value Bitcoin when it comes to what it should be worth. I do believe that there is value with the limited amount of Bitcoin as well as how it could be valued in the future. There needs to be catalysts to get Bitcoin back up to the prior peak and pass that to 100K. But I want to warn you that in 2017, Bitcoin peaked at 20K, and it took about 3 years for the cryptocurrency to get back to the peak. So even saying that Bitcoin is going to 40 or 50K in a year could be a stretch. So what I'm doing is being very conservative with my numbers. If I were to value other companies and determine how much revenue they will generate, I'm not expecting the products to double in price when they go to sell. And even though Bitcoin is an appreciating asset, I need to recognize the fact that it might not be growing as fast as what many investors want to see. Now, don't get me wrong, I am bullish on Bitcoin for the long term, but I also need to be real with myself and understand that with the current economy and the issues that are going on in the crypto world, it may take some time to get back to all-time highs. Although these problems could lead to more regulation, which could be good for the Bitcoin price. However, personally, I would rather be more conservative with my Bitcoin estimates and be pleasantly surprised than have projections extremely high and be severely disappointed. The next thing that I'll pay attention to that I think is important is an update on their projected hash rate for the end of the year. They were expecting to have 4 exahash by the end of the year going into the previous earnings call, and now they are projecting 5.5 exahash. What I will be curious about is how aggressive the company will be in the current economy and try to get an idea of what the management team is thinking when it comes to acquiring new miners and facilities, and if there is any news to the Lancium agreement, which is what's going to help them get to 22 exahash in 2023. We have seen some issues and delays when it comes to miners in Texas, which is a major reason why I like Cleanspark over the bigger miners because Cleanspark is mainly out of Georgia. Now, I doubt that this is on the horizon, but I also want to see if the company is thinking about diluting shareholders in the near future. One thing that the team has said is that there are 3 levers for financing their business. There is debt, dilution, and selling Bitcoin. Currently, they have chosen to get financing by debt and selling their Bitcoin as these are the 2 lowest costs in their opinion. However, with debt starting to dry up with increased interest rates, will Cleanspark have to go to their 3rd lever in order to maintain growing their operations? Personally, I don't think so, especially given the fact that their share prices are so low, and also they're technically diluting through their acquisitions, but it'll be important to see if this is brought up in the conference call. As of right now, going into this earnings report, I believe that Cleanspark's valuation doesn't make any sense. As of their last report in August, they had total assets of $411 million and total liabilities of $34 million, which means that their total stockholder equity is $377 million. And what is this stock valued at? Under $175 million. So unless you see this stock going under, I don't see how someone could justify their current market cap. If we were to look at Riot, for example, they have a hash rate of 5.6 exahash. If we took the amount that they have in Bitcoin and remove it from their market cap and then multiplied it by the hash rate ratio between Cleanspark and Riot, we would see that Cleanspark should be valued just over $765 million. Now, of course, there are other factors involved like cash on the balance sheet and the amount of growth, but even still, Cleanspark's valuation would be significantly lower than many of their competitors. In a previous video, I compared all the top Bitcoin miners to share why I'm buying Cleanspark over all of them, and valuation is the biggest reason. I believe in the management team and they have proven to expand at a rapid pace. But when you include the fact that they are valued tremendously lower than their competitors, there is no question for this one to be a part of my portfolio. But there is one thing that I've needed to take time to consider, and that is the safety of this stock. If there ever came a point where people didn't want Bitcoin, then that would send Bitcoin prices tumbling down even further than where they are right now. Personally, I don't think there will be a time where people devalue Bitcoin, but that is still a risk to be recognized. And that's why I cannot make this a number one position. In terms of reward, I believe that this company right now could give me one of the greatest returns ever. And when I consider what Bitcoin mining company has a strong foundation when it comes to renewable energy and profitability to where they can focus on growing hash rate, Cleanspark is easily at the top of the list. Add that with the fact that they are significantly undervalued in my opinion, plus when you compare it to the other miners, they're significantly undervalued. If you are bullish on Bitcoin, there is no question for Cleanspark to be on your radar. Now we will see if anything changes over the upcoming conference call, but I do not see this earnings report as important unless they miss badly on their earnings or they talk about diluting shareholders. But I hope you all enjoy the rest of your week and I'll see you in the next one.